Good morning, everybody, and welcome to the Daily Energy Markets podcast. It is 10:30 a.m. in the UAE, and Brent crude oil is trading little changed in the Asian markets today at $85, $83 a barrel. Still a healthy, vibrant price. At that average for the year, you'd be popping whatever is your equivalent to celebratory stuff. It is clearly a very healthy price, but in some ways stuck. It's sort of at its ceiling rather than its floor, it feels, in 2024, where we've had an average price so far this year at about $84 a barrel. So a little bit above that, but nonetheless, nothing really lifting it off to break it out. It looks like it wants to break out every other few days or weeks, and then it sort of pulls back. Let's kick off this morning with Omar Al-Abaidli, who is obviously sitting in Bahrain and Director of Research at the Bahrain Center for Strategic International Energy Studies. Omar, I wanted to kick off with you this morning to get your thoughts on where the geopolitical risk is in the region at the moment. We have had a very big election result in Iran, and I want to start there from your perspective. And the sort of interconnecting points with the war in Gaza, what this all looks like for a region trying to find a new dawn.
Well, actually, I think the election results in Iran were an unexpected positive surprise because people were expecting hardliners, and hardliners are obviously not the ideal choice when it comes to regional stability. So that was a welcome boost, but more generally, the sentiment, I think, as I say, is that we're definitely in very murky waters. The European elections, the British elections, the French elections, everything seems to be pointing and the US elections, everything seems to be pointing in the direction of the West really taking its hands off the wheel when it comes to the Middle East, and letting the Middle East really sort itself out because they don't want to get involved. And in principle, that's actually a good thing because the region has suffered a long time because of external involvement. But what it means in the short to medium term regarding your question is that it's very, very uncertain. And with the situation continuing to be unstable in Gaza, we can go for very quick improvement. We can go for a very rapid deterioration in regional stability. All I would say is that the election of a reformist in Iran is really fortuitous, and it comes when Bahrain, 3 weeks ago, held out the olive branch to Iran, and obviously Saudi Arabia, with the mediation of China, has been doing the same. So we are seeing some potential, how shall we say, budding flowers of peace in the region, but it's all very, very, very fragile and hinges really to a significant degree on what's going to go on in Gaza in the coming 3 weeks.
Vandana Hari, founder and CEO of Vanda Insights. I wanted to start with the geopolitical narrative, Vandana, because I feel to a certain extent we've reached a high watermark, at least I hope, with the current instability. That's my sense. There's exhaustion in the region by the major actors. There's obviously still a big war in Europe. But when we look at the oil markets through the rest of the Q3, with sort of parking geopolitical risk premium on the side, where do you see the fundamentals of supply and demand taking us through this quarter?
Good morning, Sean. So I think the Atlantic hurricane season definitely is on the radar, and looking at the very early start at a Category 5 hurricane in the form of Beryl last week, looks like this season could keep the market on its toes. Now, Beryl has spared, from what we can tell, the offshore Gulf of Mexico oil and gas production facilities and the refining and related infrastructure in Texas. But we know that this region is major in terms of crude supply, not just to the US, but the overseas markets. And it's the beating heart of the US refining industry, with nearly 8 million barrels per day of refining capacity between Texas and Louisiana. So I think that one will keep the market on its toes. All the other factors you mentioned, geopolitical fear premium, I think that's pretty much sidelined. We had some headlines on the Canadian wildfires. I think that's also not a major concern. Of course, the market will be paying attention, is paying attention once again very closely to the EIA weekly data. And of course, last week was a bit of a shocker. So again, this week comes around. But aside from what's happening to US crude and product stockpiles, I think there's going to be quite a bit of, or there ought to be a close attention to US oil demand, which then, feeds into the bigger demand picture that we've been talking about. Summer is here, oil demand bump, but could just jet fuel carry through that demand bump? Because gasoline in the US is not doing well, about 1% lower year on year. Distillate, across the Atlantic in Europe as well as the US has been quite sluggish because of, ongoing contraction in manufacturing. So I think these are all the sort of pieces that the market is going to try and put together. Just very quickly, I'll add one more, which is probably a bit esoteric, but what went on in the Platts North Sea physical assessment window, especially through the second half of June. Some of our listeners may have paid attention to it. There was quite a bit of bidding and buying frenzy by two trading houses. Yesterday, it turned out one of the trading houses that picked up quite more than usual, shall we say, cargoes turned into a seller. So I think there will be a close attention on that window as well. It's perfectly capable of influencing sentiment on physical Brent and related crudes as well as Brent futures.
Yasar Al-Maliki, Gulf analyst at the Middle East Economic Survey. Yasar, I wanted to get your thoughts. I mean, looking at the supply side, a lot of the sort of foundations of the second half of the year are built around OPEC plus discipline on maintaining supply cuts, followed by increases in the fourth quarter. But the bridge to get there appears to be getting the violators, if you like, those who have overproduced, to cut back and to meet their obligations within the defined production quotas, notably Iraq, Kazakhstan, and Russia. Thank you. And it was agreed at OPEC Plus last week or the end of June that they would do so. Your thoughts on where OPEC Plus supply control fits into this narrative in the third quarter, and will it move the needle at all?
So it is, thank you, Sean. It's quite an important factor, because what we are talking about here is, well, we are going to add some barrels by Q3, and the compensation for the overproduction by these countries could potentially lessen a possible supply side surplus from the tapering of the cuts, but that will definitely depend on enforcement. So Kazakhstan, I think they said they will be compensating by September 2025. So did Iraq say the same? Now, I can tell you more about Iraq because it's a country that I follow quite closely, and I can tell you this.
They have been one of the big violators.
Yeah, exactly. And I can tell you that without proper enforcement, any such scenario is going to be hard to achieve, especially with Iraq. So this is quite important because people do not really go into a bit of detail on it. So as you said, if you look at OPEC 9, these are the countries that are subject to the cuts within the group. Compliance has markedly improved between Q1 and Q2, and Iraq remains largely behind everyone else. On average, for the first 6 months of the year, Iraq has produced by over 220,000 barrels per day compared to its ceiling of 4 million barrels a day. They have failed to adhere to their compensation plan, which was submitted to OPEC, and they are yet to submit a new schedule on how they are going to compensate. But the idea is they are going to do it into 2025, which means that, whatever uplift they are going to get from their new quota is going to be less if they adhere. Now, why do we have this overproduction from Iraq? There are really two reasons. One, we have an overhang in federal output. And by federal output, I mean production from the southern and central region. And this started from April 2023, when the pipeline to Turkey via the Kurdistan region stopped. So you had a lot of shut-ins in Kurdistan by independent producers, and the federal government wanted to take advantage of that by adding barrels in the south and exports it through its Gulf terminals, and they have been slow in curbing that output. So this is the first factor. The second factor, which Baghdad likes to publicly blame, is a rebound in Kurdish output itself. So you have those independent oil producers or companies that have been adding production since the second half of the year, and now you are looking at 290 to 300,000 barrels per day compared to 450 in the past. So it's quite a sizable addition. And this goes mainly to the local market. Some local traders even take it across border. Now, Baghdad has no control over this in Kurdistan because they do not recognize the contracts with these independent firms. And of course, controversially, and this adds a lot of complications to the overall pictures, that Iraq Supreme Court doesn't even recognize the Kurdistan oil sector as as legal. Now, what does this mean? The central government practically has no control over Kurdish production. It does not want to reduce its own production to comply with OPEC plus cuts, because that's going to reduce exports and going to be financially detrimental to the federal treasury. So you have an impasse, and this is why Iraq promises to reduce its production, but they cannot really deliver. They have been slow at it.
One of the sort of ways that sort of keeps the market relatively calm, at least the perception of, is that the barrels sneaking out of Kurdistan are literally on the back of trucks, and so volumes can be not necessarily significant, but you're indicating actually they are quite a lot. 250,000 barrels a day is a big number. Let's come back to that. Omar, I wanted to get your thoughts again on this, where is the region at the moment? There's been a lot of concern in recent weeks, particularly about the conflict heating up on the Lebanese border with Israel, and for a number of days last week, it seemed like we were literally, finally, in a way, what we've been dreading for a year or 6-7 months now of the Israel invasion of Gaza would expand into a regional conflict. And we've come close a few times, and most notably, Iran and Israel's face-off in the second quarter, which was a brief moment. Why is this Lebanon one that could be greater? It could be the trigger that goes out, or is it just more noise, more posturing? Because if Iran stepped back from a face-off with Israel, I just can't see how Lebanon would have a green light to proceed.
It's not posturing. I think the most important element is Netanyahu's efforts to maintain his grip on power. The combat operations in Rafah and in Gaza are, seem to be scaling down compared to the heaviest parts. And it is clear that a wide, component of Israeli society is dissatisfied with Netanyahu's premiership. Remember, he was the one who was in charge when the crisis in October 7th erupted, and Israelis haven't forgotten that, and they're looking forward to their opportunity to convey their dissatisfaction towards him regarding that. And so,
given that point, just to sort of interdict immediately on that, how would there be any appetite amongst an exhausted Israeli public to a major conflict with a neighboring state? I just don't see how that stacks up.
He is not forced to call an election for a significant amount of time, and so if there is now at the moment, his excuse for keeping a government operational is that they're in a state of war, and so the calculus is quite simple. If we are in a state of war, we don't have time to run an election. It's not safe for an election, and seeing as the war with Gaza seems to be petering out to some degree, I'm going to have to find another war to keep me in power, and he's one of a wide variety of leaders we're seeing in global politics who are quite happy to, make significant sacrifices in terms of the national interest to further their own personal interests. So I really think it's not posturing. He is picking a fight with southern Lebanon, and although Hezbollah is reluctant, they're not chumps. They will not allow their leaders to be picked off willy-nilly indefinitely. And at some point, they will send a stronger message to Israel. And the question is, will this kick off? And I'm afraid the indications, at least as far as I'm concerned, are that it will escalate significantly, because that's exactly what Netanyahu seems to want. And then really you're into the Wild West when it comes to what could happen for the region.
Vandana, the other, obviously, I mean, geopolitical risk premium could come roaring back, as Omar indicates, under those circumstances. At the moment, it feels a little bit subdued. But where are we into Asian demand? Somewhat flat in the first half, obviously consistent, but not necessarily that sort of return of China. Is everybody's waiting for Godot. At some point, we just have to give up waiting for Godot. But ultimately, what's your outlook? Where does China and the rest of Asian demand look? As obviously has always been the big pillar, particularly of incremental demand growth, which this year, of course, is hugely different between OPEC 2.2 and IEA's 1.1. So where are we looking at this point? More than halfway through the year now.
Yeah, absolutely. We should talk about China and Asia. It is the other part of the equation that I started off with in my first response to you, Sean, like what is happening with regard to diesel and gasoline demand in the US and Europe. And then you come towards Asia. And I think this has been either in a blind spot, I feel, for the oil bulls calling for $90 and higher crude prices, or simply they're just disregarding it because it suits the narrative. And I feel that's dangerous, because I don't think there's really any two ways about where China is going at this moment. We have now the first half year's data in hand, and of course not official, but nonetheless, based on lots of analyst estimates and so on, we know that Chinese crude imports through the first half of the year were actually a couple of $100 up, probably 300,000 barrels per day lower year on year. That's not a factor that one should disregard. China has also stockpiled an estimated almost close to 800,000 barrels per day on average to the first half of the year. Now, if you zoom out, of course, India is doing well. I mean, relatively speaking, the first half of this year, Indian fuel demand, according to official data, was up about a little over 4% year on year. But again, as I've said time and again on your show, Sean, this needs to be put in context. Indian demand at 5 million barrels per day with a 4% growth is adding in absolute terms about 220,000 barrels per day in oil demand. Zoom out further, Asia, if you look at Asian crude imports, also about a couple of 100,000 barrels per day lower year on year in the first half of the year. So that doesn't really give you a picture of very strong demand growth. And exactly as you mentioned, Sean, that this is the region that every analyst of every stripe is pinning their global growth forecasts on. It does deserve a closer look. And especially, as you mentioned, 2.25 million barrels per day OPEC forecast of global oil demand growth this year. Well, it's certainly not come in Asia, and I can't see how it has come from Europe or the US either. So unfortunately, I think they're coming out with their latest monthly outlook tomorrow, I believe. And it'll be really interesting to watch. I think they are in a slightly tough spot now. Do they walk back that very optimistic figure, and optimistic certainly compared with the IEA or the US EIA, which are closer to 1 million barrel per day forecast growth. But, again, just to end that with the agreement that we saw the 8 members of OPEC Plus going to start releasing the 2.2 million barrels per day, that in some way has to be tied to OPEC's outlook of quite a robust demand growth this year. And if that's not happening, then, how do you marry that with the decision?
At some point, that does have to be corrected. One would think we're now deep into the year, and we still have that number out there in terms of incremental demand growth on the OPEC side. So we'll see
Yeah.
what the report says when it comes out. You saw, just picking up again on this OPEC plus excess supply beyond the quotas, and most notably Iraq, as you were talking about there. I wanted to get your views on the triangle that is Turkey, Kurdistan, and Baghdad, the Ankara, Istanbul, and Erbil, Ankara, Baghdad, and Erbil. What is that relationship now in terms of facilitating this leaking of, you're indicating 250 to 300,000 barrels a day?
Yeah, so let me get a bit into the weeds of that, but at the end I will just comment on geopolitical risk that Umar was speaking about. So you understand this better, Sean, and everyone. I'm not saying everything is leaking out. I'm saying there is a certain amount leaking out, because by the end of the day, you do have refining capacity within Kurdistan region that can take up to 250,000 barrels per day. But at the same time, the numbers change day to day, depend on the availability of trucks, depends on the availability of space in local refineries and storage depots and so on. So just to look at that triangle, and this is where many people have a lot of misconceptions. They think that the problem is a state level problem between Kurdistan, Turkey, and Iraq. So and Kurdistan is part of Iraq. Turkey and Iraq have reached an agreement. They do have litigation on the sides, in the US and so on. But they have reached an agreement practically on restarting the exports. And Kurdistan, the Erbil government, is part of that agreement. Everyone is ready to do something about it to restart exports. But there are a few factors. One is the disagreement over contracts. The Iraqis, Baghdad doesn't recognize production sharing contracts because it comes from a resource nationalistic, factor, which is, oil is owned by the Iraqi government and is owned by the whole Iraqi people as per constitution, and no company can have a share of produced oil. So now this is opening up because the companies and Baghdad have sat down. They are trying to think of a new model, a new contractual model, based on profit sharing and so on. But this is going to take time, and these are sometimes open-ended talks. On the other hand, Baghdad and Kurdistan, they are coming to agreements on how to get Kurdistan a share of the federal government spending, and this is relieving some of the economic problems that Erbil faces. And this also is giving Baghdad breathing space, because it's not in the best interest, again, of Baghdad to restart these exports in the north. You're talking about around 450 to 490, inclusive of some 70 to 90,000 barrels per day of Kirkuk grade. And this is amazing for Iraq if they do it, because there is a shortage of Urals like medium sour crudes in the Mediterranean, and Mediterranean refiners are crying for Kirkuk back in a way, because they have a lot of light WTI coming in. But Baghdad doesn't want to do that either, because it's not a great message to OPEC. To OPEC plus, it is going to cause them a lot of trouble in terms of compliance and so on. So it's more into the weeds and the technicalities and the legal problems that have been there for the past 20 years, really, rather than thinking of it from a macro.
Given that
Yeah.
scale of that kind of breakdown, that the OPEC plus family are kind of tolerating it, because ultimately there's so many unique complications there, and the history is caught. Let's go to the survey question this morning, and again, it sort of comes to the point that was raised by Vandana regarding the hurricane season in the United States. So the question is, hurricane season 2024 will push Brent to $90+ in Q3 after Beryl was the earliest Category 4 and 5 hurricane on record and left 85% of Houston without power. So it's the first hurricane of the season. It's a category 4 and 5, earliest ever. There's a lot of warm water building in the Gulf of Mexico, and so for the rest of the hurricane season, it's rather ominous. So is this going to be enough to push the oil price higher? So far, it seems to have banging its head on the ceiling of 86 and 87 and retreats. But will the hurricane season, in the absence of geopolitical risk premium coming back like we saw with Iran, Israel in the second quarter, could the hurricane season be the trigger that pops it up to that level?
Sean, can I
Yep.
quickly, just on that geopolitical risk, very briefly, I think we're not considering one thing. Geopolitical risk has changed quite dramatically from, decades ago. We have a lot of spare capacity, from OPEC plus countries. But, the extent of the rerouting through the Cape of Good Hope and so on is now established. And you have a lot of, supply available in terms of future time period to Europe and so on. And another factor, even if things embroil further between Israel and Hezbollah, I think there is a limited scope for what the Houthis can really do, which is very important for us in the oil market. If you put yourself in their sandals in a way, they have done the best they could do, which is, block traffic at the Red Sea and get it to historic low levels. So
that's kind of my thesis this week, that we've hit a 2024 high water mark in the Middle East, at least for geopolitical risk premium. Omar, I wanted to get your deeper insights and come back to where you started. The Iranian reformist president, this is a big moment. We haven't had one since Khatami, and there was huge optimism when Khatami came, which is now, what, 20 years more ago. And it synchronizes with this window of time when it does appear that the regime in Iran and Tehran is entering its final days of the Khamenei reign, and there will be a transition at some point, and sooner rather than later, to a new supreme leader. And with a reformist sitting in the top chair of president, that's quite a significant position of influence at this time. So I just wanted to get a little deeper into the regional ramifications for this posture. And will the big actors in the region, Israel, Saudi, the US, give him time or space to show some positive indications?
So I think, first of all, I'll answer the second bit. Will they give him space? I think the US is absolutely giving them space, because the US is really just quite disinterested. Israel is really the only actor. And I think as long as the US is not acting, then Israel is highly constrained in what it can do directly against Iran. So really, there's absolutely a lot of leeway for Iran to demonstrate to explore its strategic options. And then from the Iranian side, I think that there is a cognizance that there is an opportunity to be a constructive contributor to a new regional order, and there's a lot of money a lot of economic benefits to be harvested if that new order is stable and long lasting and involves good relations between countries like Saudi Arabia and Iran and UAE and Iran, and so as I say, it's highly fortuitous that a reformist has come in power now. This is his opportunity to demonstrate to the Iranian people that there are alternative paths to the one they've been taking, and they can be friends with everyone in the region. And when I speak to Iranians, I see throughout the regional, think tank circuit, the language I'm getting from them is very positive too. So I would say from the Iranian side, I'm cautiously positive, but the sticking point remains what's going on in Gaza and what's imminent in southern Lebanon, because that could really, transform a multilateral, stable regional order into a polarized, us versus them fight to the death. So let's keep our fingers crossed.
Yes, definitely. Vanda, the last word to you. Your home country, agree there's a sort of 2-to-1 agree here in regards to the hurricane season could be a trigger for $90 oil. But I wanted, Vanda, to get you to comment on India. The first foreign visit by Narendra Modi after getting re-elected without a majority is to Russia. And I wanted you to speak to that and the new term that the Narendra Modi now will have, and where Russia and Russian energy relationship fits into that. We obviously saw over the course of the first years of the Ukraine war, India benefiting greatly from discounted Russian oil.
Yeah, but if you may, I'll just, if I may rather, a very quick comment on the survey question.
Yes.
I answered agree, which was slightly contradictory to what I said earlier about, I don't think, I think 90 is a bit of a stretch. So yes, a hurricane, I think, could push prices towards 90 or even higher. But again, I think we should remember that this is election year. I don't think we forget any day, but I think the Biden administration will feel compelled. Yes, they have a very depleted SPR, but they will feel compelled to put more oil. Maybe other OECD member countries could also put more oil into the market. Should we have a sustained and large loss of supplies from the market? So just on that point, I wanted to clarify. So again, I don't think 90 is not my base case on a sustained basis.
Yeah.
Yes, Modi is in Russia. The mandarins in Delhi have said that not to put too much emphasis on this visit. Of course, it's a high-profile visit, but the two countries are committed to their leaders meeting every year, and I think this skipped a couple of years. So this is basically an overdue visit. Of course, that does not take away from the fact that the countries have had commercial ties for decades. That's not new. But again, yes, they have grown very, very strong over the past 2 years. I think the importance of discounted Russian crude, which is now 40% of India's crude basket intake, that cannot be overstated. So, but beyond that, I don't think there's any like major items on the agenda as such. It's no major MOUs, I don't think, or big agreements to be signed. I do wonder personally whether Modi will reiterate his sort of advice to Putin that he gave the Russian leader early on after the invasion as well, that this is not the era for waging wars. Even if he does, frankly, unfortunately, I don't know what good that could do. We've seen Xi Jinping try quite a bit to be a moderator to try and calm things down on the Ukraine front, but that hasn't helped. In the end, India continues to benefit 40%, as I said, of crude imports. Of course, the discount waxes and wanes, but it is always a discount. Otherwise, Russian crude would not find home in India. So definitely, India stands to benefit. There's a little matter about currency. Could they trade in ruble or rupee? I don't see that making much headway. The balance of trade, unfortunately for India, is skewed very much in favor of Russia. So possibly Modi will try and see what more India can export to Russia. But, it's, I think, more business as usual. I wouldn't expect any major fireworks out of this meeting.
Okay, we're going to have to wrap it up there. We didn't even mention Joe Biden, I think, or did we indirectly perhaps? Still trying to figure out where that one's going and how big of an impact it could have on all markets. Unprecedented case where a president would have to resign due to what appears to be concerns of dementia. That's pretty dramatic developments there. Brent crude oil, as we started trading at 85.71 in its happy place, nothing really obvious on the horizon to knock it in either direction. We're going to say thank you to our great team for their contributions today, but also most notably for their contributions through the season as we wrap up the last week before the big summer break. Omar Abouedli, as always, in Bahrain. It's been great to have your insights, particularly on the neighborhood and the geopolitical connecting dots there. Always great to have your insights. Yasser Al-Maliki, nobody better on Iraq, and thank you so much joining us from those early mornings in London. And Vandana Hari, been a anchor of this podcast for a number of years, and we really appreciate your monthly insights, and nobody better from Singapore. Thank you so much. Have a great summer, and we look forward to seeing you all in September. Take care.
Thank you. Happy
Take care.
holidays.
Thank you.
Happy holidays, guys.
Cheers. Bye.